And so I always say, once you become, get your LLC or whatever entity you register with, you get kind of get like this virtual card. And it's like, to me, it's like a membership, and like membership, everything has its privileges. And so how do you keep your privileges? I'm going to talk about that in a few, but I also want to go over some of the things I call the Big 10 after. And these are things that I recommend that you have done after you have registered your entity, whether it's with DCRA, I mean, with DLCP in DC, or your state secretary's office. And so, and it's number one, get any licenses and permits. Check your state, or if you're in DC, check DLCP to see if your specific industry requires you to have any license and permits. If you are in DC, all business, regardless of the industry, has to have a basic business license. Not all states do. Some only require certain industries. So you want to check to make sure. Get your EI number, which is your employer identification number. What does that mean? Just like you as a person, you have a social security number. Now your business has an EI number, or your taxpayer identification number. That's going to be your unique number to your business. You're going to use that EI number on bank accounts. You're going to use it on, if you try to get business credit, if you try to get into the SAM system, where that's where you do government contracting, they're going to ask for this EIN number. It goes along with getting a business bank account. You want to make sure once you become a registered entity, especially the ones that have the asset protection, one of the ways that you can lose your asset protection is if you commingle your funds. So you have to have a separate bank account from your personal and your business. Now, if you're a sole proprietorship, that doesn't apply to you. But if you are either LLC or SOC Corp, or even a nonprofit, a 501c3, you have to have a separate business account from your personal. You have to register with the state tax office. Check with your state and see what the requirements are. Even if you are going to be an employer, you still have to have a withholding account. So check with your state to see what that requirement is. Write an operating agreement. There's not a requirement in some states, but some states do require it, but some states don't. An operating agreement is just basically outline. It's like your blueprint for your new entity. How is it going to be operated? How is it going to be funded? What happens if we have to dissolve it? It's important too to have it, because if you are a single member or sole proprietor and something happens to you, somebody needs to be to pick up this operating agreement and see what they need to be doing to help you out. Or if they have to dissolve it, it gives some instructions in that. Set up your bookkeeping. That's very important. That's the one thing they look at too. If you ever get in some trouble and you have to prove that you're a real business, having a bookkeeping system. I don't care if it's an Excel spreadsheet, you have a journal, or you use QuickBooks, Wave Accounting, Gusto, Zero, any of those things. Get yourself a bookkeeping system. Insure your business. When you have an LLC or SOC Corp, you get the limited liability protection. But what it does is only protects your personal assets. You can still have your business assets taken if in a lawsuit or a settlement. Insurance will pay out if you have general liability insurance or professional liability insurance, kind of like malpractice insurance. It will cover you if you have to have a judgment. I know that if you go to our website, we're going to be having a session on business insurance in the next couple of weeks. So if you want to learn more about business insurance, please sign up for that training. Meet with a tax advisor. Now you need to know what your tax responsibilities are, not only for the state, but for the IRS. Keep good records. Actually, keep good records, number 9, is very important because it's in the code. Limited liability company and SOC corporation is governed by state statute. And under the state statute, which is whether it's the Limited Liability Act or the Corporation Act, one of the languages in there, it says one of the sections is keeping records. So you need to keep all your records. I recommend get you a notebook, a binder, all your formation documents in there, your articles of incorporation or your trade name certificate, certificate of good standing, your EI number, which is going to come in the form of a CP 575 notice from the IRS. You're going to need to put all that stuff together, or you can create a special folder on your desktop, label it corporate formation documents, and keep that secure. Also, you want to stay legit. Most all states, except about a 3 or 4, require you to do an annual report or biannual report, meaning every 2 years. So like if you're in DC, for instance, you would do it the first year after you filed your, you get your LLC or corporation status, and then it's every 2 years. In other states like Maryland, Virginia, Pennsylvania, Florida, it's every year, and it's usually you pay a fee from anywhere. It could be anywhere from $60 up into like Massachusetts, it's like $600-700. So if you don't do your annual report, you can lose your status with the state. So we have some basic housekeeping I want to talk about. Is just to relate, what is an LLC? It's a state legal entity. It has nothing to do with the IRS. It provides limited personal legal protection. Like I said, limited. You don't have a full shield of armor. It can be penetrated. And one of the reasons how you can lose your LLC or your S corp status, if it's like malfeasance or negligence or fraud, or you didn't treat it like a real business. It's not a corporation, but it's a hybrid between a sole proprietorship and a corporation. You can be yourself, or you can have other people, but you can be taxed as an S corp election. I'm going to talk about these things in an upcoming slides. So I talked about last week, this week, it's on Tuesday, the benefits. Kind of want to give you some of the benefits just briefly. You get, it's inexpensive to form, less paperwork. It gives you a lot of credibility. You get that personal liability protection in there with the LLC. We talked briefly about what is a registered agent. This is the most important thing that you need to know legal-wise. This is one part, is how to make your business legal. By law, you have to have a registered agent. That is the person that's going to be like your first line of defense. That's going to be like your linebackers on your scrimmage line, right? It's going to be the people that's going to protect you. You being the quarterback is going to protect you. And so that person, you can be the owner. You can pick anybody, individual. Some states like Virginia says it has to be, if it's not yourself, it has to be a licensed attorney. So you might want to check your state to see what the requirements are. Most states allow you to be your own. A lot of them allow third-party companies. Some say the third-party company has to be a licensed attorney. That person is going to get all service of process. That means any subpoenas or summons is going to come to that person. So you want to make sure whoever you pick is reliable. If they don't even check their own mail regularly, it might not be a good fit. It might not be a good fit for you if you don't check your mail regularly. You're going to get that person will get all compliance notices, tax notices. And in some states, in some state law, that person must be present during business hours. Why is that important? Because you have designated that person as an agent. And so if your business hours are 8 to 4, 9 to 5, and say somebody from the government tried to serve you and nobody's present, what can happen is they can go back to the court and say, hey, Little Rock Ice Cream Company was not present. They can then ask for a summary judgment on you. So that's why it's so important that whoever you pick as a resident agent understand the rules and requirements of your business. This is all part of making your business legal. So a lot of people just kind of stumble over their responsibilities, because a lot of times they just don't know. They think, okay, I go and register with my state secretary's office or DLCP in DC, and they think they're done. And it's not. It's not a one and done type thing. So how do you maintain your LLC? What is the requirements? So we talked about the operating agreement, and that, I kind of talked about a little bit. It tells you your organization, your management and voting, any contributions that you have, any membership changes, and how do you dissolve it. The LLC renewal, we talked about that. I talked about that a few minutes ago. If you're in DC, you must complete the annual report 1 year after you start. usually by April 15th in DC. Then it's every 2 years. And then it basically details your business activities and it keeps your LLC in good standing. So basically what it does is you basically telling the state, hey, I'm still here. I'm still operating. This is how they keep tabs on you. Again, every state is different. What depending on your state, not everyone is due April. There's some states that do in January. There's some states like in some states that do in March. You need to check your state to see when your annual report is due. This is called a certificate in good standing. You can, once you have registered and you have maintained your LLC, you can get what they call a certificate in good standing. This proves to people that just because you have an LLC or corporation that's been registered doesn't mean you're in good standing. And so a lot of times when you try to get a business bank account, or if you try to even buy a car in your business name, they're going to want to see the certificate in good standing. And you get that by maintaining your LLC accurately, filing your annual report, paying any fees and registration fees to keep it that way. That's how you get your certificate of good standing. So again, I talked about who can request it. SBA can request it. Government, lenders, bank, business partners, and investors may want to see that you're in good standing with the state before they give you money and invest in you. What happens if you fail to file your annual report? Well, you can get revoked. In some states call it suspended, or some states call it forfeiture. So let me give you some really quick compliance tips to help you keep your business. Once you get your business legal, how to keep it legal. My recommendation is create a compliance calendar. That's going to be a calendar that you're going to be using to record all your important dates. When is your annual report date due? When is your annual report due? When is your sales and tax return due? All these things that can cause you some fines, fees, penalties, and even administrative dissolution. That's when they close you out. You need to make sure you're recording those dates on a calendar. There are third-party companies that you can use that do compliance. They help you. They'll send you alerts. They'll send you emails. They'll say, Daniela, your LLC renewal is due this month. They'll kind of help you. You can also task, if you have a virtual assistant or an assistant or a bookkeeper, you can see that's something they can do to help you keep track of your requirements when it comes to making sure you're following state regulations. I want to point this out. I see people get this all the time. This came from two of my clients. One was in Tennessee and one was in Connecticut. What happens is that sometimes when you register, you may get this notification saying you need to respond to get this. These are all scams. And unfortunately, a lot of my clients have already gotten this. So if you have not registered for your business, make sure that you don't fall victim to these type of scams. If it does not come from the CO, comes from the state secretary's office or DLCP signed by the state secretary or the director of DLCP, is most likely a scam. And again, most people have paid the $80, $90 because they're saying that if you don't do it, you can lose your status. That is not true. If it doesn't come from the state secretary's office or DLCP, it's a scam. Let's talk about the articles of an organization really quick. I want you to make sure that one thing about keeping your business legal is making sure your documents is correct. I see this all the time. This is an instance of somebody who used a third-party company and their articles of organization was not correct. And so under where it has right here, where it has the authorized person, that is actually the third-party company's name, not the owner. So this person had to amend because this company did not file their articles of incorporation. And that's there, so didn't really make the business legal. What it did made it legal, but they didn't have proof of ownership of the business. So when you're getting, part of making your business legal is making sure you're keeping your documents correct, because it can have an adverse effect on you if you don't. So let's talk about the LLC shield real quick. And I talked about it briefly, but what it does is whether you have an LLC or SOC Corp, you get the same limited liability protection. And what it does, it protects you. You're the owner. It protects you from lawsuits, customers, creditors, and even the business world. That's why it's so important. People always ask me, should I stay a sole proprietor or should I become a registered entity? When you're not a registered, when you're just a sole proprietor, you're not going to have this soldiers or this armor around you to defend the outside forces from your business. So I want to talk about piercing the corporate veil a little bit. What that means is how you can lose your asset protection is it's called a corporate veil. So you don't, it's like piercing the corporate veil means that you have done something to unlegalize your business in so many words. So I gave an example right here where Mike sues the fitness company. And because the fitness company did not do their filings, they did not have a registered agent, they were co-mingling assets. If Mike wins, the owner can basically lose some of her personal assets, just like any other judgment. When you get a judgment against you, they can garnish your wages, they can put liens on your property, all those things. So that's why it's important to make sure once you get yourself legal, is to make sure you keep it legal because you don't want to fall victim to this type of situation. Now, in reverse, where this person, sued the owner, but the owner was doing everything they had. She had filed her annual report. She did not commingle in funds. What happens is that this Paul can still be awarded damages, but he cannot put any asset. He can't put any liens on her cars or houses, or he can't do a judgment on her personal income. Now he can still go after her her business assets, but he cannot touch her personal because she did what she was supposed to do in maintaining her business entity. So also want to tell you about is be aware of personal guarantees. Let me go back. So personal guarantees can also mess with your protection. That's when you give your social security number. And a lot of times when you're trying to get business credit or get loans, they're asking you for your social security number. Be careful. Excuse me. People always ask me, well, how do I know? If they pull your credit report and you get that alert from either Credit Karma or Experian, it says somebody pulled your credit, that means that there's going to be a personal guarantee. And so when you have a personal guarantee, you can lose some of your asset protection that way. Also, the IRS basically says that if you personally guarantee, say, business credit or loans, you can't write off that debt because they deem it as a personal debt versus a business debt. Another thing that people, I've seen people make mistakes in keeping their business legal is not properly signing their documents. It's very important once you make your business legal, now you have to really think legal minded and really legalize your business. And so I want to give you some proper ways to basically sign some of your legal documents. The first two is acceptable. The third one is not. Excuse me. The third one basically says, I am personally, Stephanie Magnus, I'm basically saying on the third one that I'm personally guaranteed everything in this contract, the terms and conditions, everything. So I'm taking full responsibility. That's typically the third one is what a sole proprietor will sign. If you're LLC, S Corp, C Corp, partnership, or even a nonprofit, you should be using the first two because the third one can really get you in trouble. I had a client that defaulted. He had a trucking company and he defaulted on some trucking loans and he signed all his contracts under just his name. And he was wondering, and he lost in a settlement, in a judgment. And now they're attacking his W-2 income because he did not properly sign his documents on behalf of the company. So I want to talk about some of the consequences of just not keeping your business legal once you make it legal. Tax liens, you can find yourself in a government audit, have to pay back taxes, loss of good standing, liability, identity theft. The FTC says business identity theft is on the rise. Late fees, penalties, loss of your name, Once your LLC or S corp goes into forfeiture, you lose your name. Somebody else can come and create that business in the state with the same name, unless you have a trademark on that name. Lost to the courts, meaning that if you're not in good standing, you may not be able to bring a lawsuit against a client in court. That happened recently in Maryland. It was a case it was Ambassador Road versus Nationwide. And the company did not have their LLC in good standing. The court determined that they didn't have a cause of action to even file a suit because they're not in good standing, and they basically kind of threw it out. Forced closure. And then in some states, believe it or not, if you don't keep your LLC or S corp C corp in good standing, it is a crime to operate in that state. For instance, in Maryland, if your LLC has been forfeited and you continue to operate, and the attorney general find out, you could be charged with a misdemeanor up to a year prison or a fine of $500. So this is why I wanted to really do this session, to let you know that it's just not, you just get your piece of paper and it's done. Now it's the maintenance of it, so that you don't have to fall for any of these consequences that I'm listing here. Let me just tell you something. Ignorance is not bliss. And why I'm telling you this is that it's a Latin term. I can't never say it, but in law school, we're taught ignorance is not bliss. You cannot go in there and say, I did not know, or did not, Your Honor, I did not know. How was I to know? Once you get this, it's kind of, I told you in the beginning, membership has privileges, and they're expecting you to know. So you cannot go in there and say you did not know, because as an LLC or SOC corp, you get privileges that a regular taxpayer doesn't get. One, you get to write off expenses like rent, electric, gas, water, cell phone, that a regular taxpayer can't do. So that's why you're expected to be, have and you're supposed to get the education that you need. That's why you have programs like this, to make sure that you are armed with information, so you don't fall victim to any of these things I'm talking about. So quiz time, really quick, is if you can put it in the chat, true or false. As an LLC, you can pay yourself a reasonable salary. You just drop your answers in the chat real quick, true or false. I'll give you a second, those who want to participate. Okay, one more second. No one wants to dare to answer the question. Okay, that's fine. The answer is false. It's false. As an LLC, by law, you are not allowed to pay yourself, because as an LLC, you're considered a member, and a member can't be an employee of the LLC. So just keep that in mind. Now, if you want to know how do you pay yourself, by law, is you can do what they call an owner's draw. And an owner's draw is when you take out when you need it, and you record it on your chart of account as an owner's draw, not a salary. And so that's kind of important. And if you ever want to know, publication 535 explains all this. If you Google IRS publication 535, but if you're a client of mine and you want to learn more about it, we can talk about it, and I can share with you the publication. But you cannot deduct your own salary or any personal withdrawals from your business. You're not an employee of the business. You are a member. And it's also because of double taxation. You're already going to be charged self-employment tax. You don't want to be taxed on the same money as income. And so that's kind of how that works. So how does it work? You write yourself a check from your business account, then you deposit into your personal account, and you record it as a business expense. It's that simple. What you can whatever you want to call on your chart of accounts, you can call it an owner's draw, you can call it an expense account for the owner. The IRS doesn't care. This is kind of how you do it. Now, here's kind of like just a brief overview of all the different entities. So how do you pay yourself? Now, if you want to do a paycheck, you will have to definitely be a S Corp, C Corp, or do the S Corp election. And this is the form you would fill out. You would fill it out. If you want to pay yourself a salary, you will fill out this form, you mail it to the IRS. Don't do it until you get approved. You have to get a letter from the IRS that says that we have switched, you are allowed to do this election and pay yourself. Until you get anything back from them, you keep filing as a sole proprietor and you keep doing the owner's draw. So hopefully you introduce yourself to the IRS. This is another part of making your business legal, is making sure you follow all IRS regulations and codes. So by now, you should apply for the EI number under as a form SS4, or you go online and do it. This is kind of really important. Is once you get your EI number, you're gonna get this notice. It's called a CP 575A notice. The biggest mistake is people lose this. It is really hard to get again. And a lot of times nowadays, people are actually, they don't just want your EI number. They want to get this letter from the IRS to prove that you do have an EI number and you are authorized to use that EI number. And a lot of people have lost this for whatever reason. And it's really hard to get. So most of my clients sometimes who have lost this had to already, they had to go get a new one because it's really hard to get it. So if you have not gotten an EI number and you're in the process of getting it, make sure you save it, especially if you do it online. If you do it online, make sure you do the last step and you save that PDF. If not, again, it's really hard to get. And getting through the IRS these days is really hard. You'd be on the phone for hours. So again, you have to say hi again to the IRS on April 15th. So what happens is that you will file your business tax return with your regular 1040 if you are a LLC or sole proprietor. And what you do is called a Schedule C. I'm not really going to go into it today. I just wanted to give you a little glimpse of it. So basically what you're going to be reporting is your gross receipts, which is everything that you sell. And then you're going to have your profit. You're going to have your losses. Your loss is everything that you have spent, whether it's food, laptops, pens, pencils, whatever. Those are all your expenses. The IRS calls it the profit and loss statement. So Schedule C, keep that in mind as you are moving through your tax and legal obligations for your business. So know the basic rules, stay out of trouble. Like I said, there are certain rules that you must live by. Pay your goods and sales tax. If your state requires it, do that, because you don't want to get that envelope from your Office of Taxation and Revenue because they found out that you didn't do that. And so if you have a business that you're really selling like goods and goods, and you are collecting that 6%, whatever your state is, that is not free money for you. That's not a bonus that your client gave to you. You have to report that 6% as income to the state. Get all permits and licensing. Everybody's different. If you are real estate, plumber, electrician, you're already going to have your own business license, but make sure that your state, that your industry does not require you to have a permit or license in your state. I talked about this before. Keep good record keeping. It's also in the code. It's also by law. And so you want to put in there your articles of organization, your operating agreement, any list of all your members, the EIN confirmation letter I talked about, all your financial statements and records, and all business license and permits. If you are SOC 4, it goes beyond that. You have to keep all minutes, recordings of meetings, all shareholders documents, and everything. And again, this is all by state law. So what have we already accomplished today? You already know how to keep it legal, right? You know how to properly sign your documents so you don't cause any legal trouble. You've learned how to maintain and protect your legal entity, and you know how to pay yourself as an owner. So this is the end. So we're going to open it up to Q&A at this time.